Welcome to the Alberta Bound podcast. I'm your host, Sarah Hainsworth, mortgage broker and entrepreneur based out of Alberta. Today, I have the pleasure of speaking to Jenna Drummond, a realtor in Calgary, Alberta, and my friend Tegan McGinity, a financial advisor. We are going to chat about all things when it comes to purchasing your first home. This is a second of a two-part episode with Tegan and Jenna. So make sure you listened to part one from last week. And a reminder that Tegan, Jenna, and myself will also be hosting a free online event this coming Wednesday, July 30th, titled Your First Home Formula. So if you're ready to take the leap into home ownership, we're going to provide you with the tools and insights that you need to succeed. To find out more information and to sign up, check out the Your First Home Formula link in the show notes.
I think we should maybe just talk about like the pre-approval process. Like, say somebody's ready to purchase their first home. What does that look like? What do they need to have prepared to meet with you?
Okay, so let's talk about pre-approval. So number one, the first thing that you want to do is talk to a mortgage broker. I mean, you can talk to your bank, but mortgage brokers definitely work with banks. And so I would suggest talking to a broker. It doesn't always add up when a client thinks that they're able to qualify for a mortgage based on their income. Because on our side, there's a lot of different calculations that go into it. So it's not just, you made X amount of dollars. You have this truck payment that's eating up $1,000 of your purchasing power. On top of that, you've got student loans, which is also something people don't really consider. And when you're debt servicing a student loan, even if it's in non-repayment, so your payment is zero, we have to debt service it at generally 1.5%. So if you have a substantial student loan, you might not be in repayment, but we still have to account for that payment because it will come up at some point. So pre-approval, first thing, talk to a mortgage broker who can set you on the right path, because there's a few different things that go into it, so ratios, but sometimes things pop up on credit that you may not even know about. And so I work with some credit specialists who can help. Let's say there's an error on an Equifax report where there maybe was a mispayment or there was something that was on there that shouldn't be. They can hop in, they can get that sorted before we go to submit to any lender. If you go backwards and you go shop for a house, number one, you don't know how much you can afford, so you are going to end up potentially being disappointed. And number two, if anything comes up that would stop you from purchasing that home, let's say there is a blip on the credit profile and it's something that you didn't even know was there. Well, now you've got your offer in and you really had no business being out there shopping anyways, and we don't have the time to correct that in order to make your condition of finance, let's say. So the first step is getting pre-approved, and it doesn't mean that you have to buy right now, but at least you know what you could potentially buy for, or we can set you up for the steps to be able to buy. And that's where, Tegan, you come in, right?
So feeding off of that, do you have a recommendation at how far in advance somebody should be reaching out to you to start the process to figure out what they could get approved for, or if they, maybe based off their income, they could get approved for this, but their assets and liabilities aren't there yet, to then figure out, okay, well, I need to save this much, or I need to pay down this debt. At what point does it make sense to meet with you, start the process, and then maybe meet with somebody like me to get their ducks in a row so that they're successful when they're actually house hunting and able to put an offer in?
I would say right away, if you're thinking about buying a home, you have more options than you think. A lot of people don't really know about gifted down payment, that, if your parents are willing, or if they're able, or somebody can help you get into the home. That's step one. Or we can set you up, with Tegan, who can show you budgeting tools that can help you save each month, and then best practice when it comes to tax time, right? And saving that way.
And co-signers, right?
Yes.
I think so many people don't know about the option of co-signers. So having that conversation with you and what would need to be done is really helpful, again, just to know when you're getting started. Sarah, do you want to touch on what documents are required for pre-approval? Obviously it's a little daunting when your mortgage broker sends you the list of all the things that you need to send over. So maybe you could touch on what some of those things are, obviously having your taxes prepared, but I know it's more than that.
Yeah, so when it comes to your pre-approval, we underwrite your file fully in the background. And that means we need 2 pieces of ID. We're going to check your credit. We're going to look at your income and any liabilities that you have. When it comes to income, the way that we structure it can vary on your situation. So let's say that you are a T4 employee and you have worked at the same job for 5 years. Well, that's easy. We can just use your letter of employment, we can use your pay stub and a T4 to qualify your income. But let's say that you are also a T4 employee, but you work in the oil field, and let's say you run equipment. Well, you might run equipment every time you're at a job, but your employer changes. So sometimes you'll have like 10 employers in 1 year, and people think that because they haven't worked for the same employer for 10 years and they have 10 employers per year, that they're not able to use that income, and that's not true. For that situation, we would use an average of the 2 years of income, and depending on the lender, sometimes let's say there was a slower year, we can use a rolling average. So we can use a 24-month average because, I mean, in oil fields, sometimes there's lows and there's highs and there's times where you're making more money. But when we're asking for the documents, it's not to be like a pain in your butt. It's because we want to make sure that we're providing you with all of your options. And the only way we can do that is by having all of the information. So yeah, documentation can be a bit tedious, especially with down payment, like I mentioned, and with income. But usually we can knock it out pretty seamlessly.
And if you're self-employed, you would just provide like 2 years of your tax statements?
So if you're self-employed or business for self, it depends. Like if somebody is sole proprietor, we're able to use their taxable income and then actually gross it up about 15%. So that's helpful. When we go the incorporated route, that's when it's really important to work with an accountant, because sometimes, you know, I mean, it is their job to write everything off so we pay the least amount of taxes. But sometimes if we can have a conversation with the accountant prior to them filing and say, hey, you know what, let's not write off as much this year. Let's bump up the income so that we can get AAA lending and save the client interest. And then we'll bump it back down once they have the mortgage. So when it comes to self-employment, there are a lot more documents that go into it. So we need your T1 generals, we need your notice of assessment, we need your articles of incorporation. Sometimes we need your business bank statements because there are programs that allow us to use what the business has made rather than what you've claimed. It is tailored to the client. That's why it's really important for us to have those conversations so that we know what's the best way we're going to qualify for the mortgage and how we're going to do that.
Now, for somebody who's incorporated, does it make a difference on their approval if they're paying themselves a salary versus in dividends?
Not exactly, no. We just need to have a steady history of the dividend income. Salary income is very easy to prove, but dividends fluctuate. So as long as we have a history of it, then we can use that.
And if you're incorporated and you're just a sole owner, you're the only one working in that business, or even not, can you technically also use the business income to increase what you could get approved for? Because even if, you know, maybe you've only paid yourself X amount of dividends, but there is extra cash flow that you could pay yourself in theory, could the corporate financials increase what you could get approved for personally?
Yes, yeah. Sometimes they want to see the backing of the corp. Sometimes they don't. It really depends on the lender and the situation. But yeah, there's definitely ways to leverage the business income depending on the client.
Okay.
Yeah. Self-employed is by far my favorite like type of clients to work with, but it is tedious, right? Mm-hmm. We're all self-employed. Like, I know you guys are all out there. I think there's a different level of like, I guess, understanding or motive. I don't know what you want to call it, but there's a different level of thinking that goes when you're business for self, right? Like you kind of think outside of the box. So those are my favorite mortgages to do.
Yeah. when you're have your own business, you have to be more open-minded to different things, and
Mm-hmm.
and you're probably, I mean, depending on the person, you might be a bit more conscious on your financials too, right? Because
Mm-hmm.
you don't have just a steady paycheck coming in, so you have to be a bit more on it and like aware of everything, and yeah, be open
Yeah.
to ways to maximize your ability to get a house. So
Yeah, exactly.
Tegan, do you have any suggestions or tips for people who are self-employed? Obviously, it's really complicated and it's going to depend on like everybody's personal situation. But like my sister just became self-employed. She's got a marketing company. So like for somebody who's just starting out, what would you suggest in terms of like budgeting and saving and like what should that look like?
So it's going to be very important to track things on a monthly basis, especially if your income fluctuates a lot. Like you guys, your income fluctuates, mine fluctuates. And so like you can get an idea of a baseline if you know like, okay, what are my monthly bills and expenses? How much on average do I typically spend, maybe like, going out, whatever it is. And that's going to give you a baseline of how much money you need to make to be able to do those things. But you can also reverse engineer in the sense of like, okay, well, how much do I need to save for retirement? How much do I need to save for a house based off of those goals? And then of course that will increase that baseline. And if you are expecting to make X amount per month, that's great. You can set up automations into savings accounts, whether it's your emergency fund or your house savings. But it is also important to track it because let's say you have a high month, right? And if you're not really paying attention and you're like, oh, I just have all this extra cash, you're probably just going to spend it, right? But when your income fluctuates, just like there's highs, there's going to be lows too, right? And so you have to make sure you actually, outside of your automations, you can manually, set that excess aside in maybe like an income buffer. That way, if you do have a low month, you can make sure you have the money there to make sure you're still making those auto deposits, right? Or sometimes people, if your income fluctuates a lot or just became self-employed and you don't feel comfortable setting up automations because your income's not as secure, that's fine, right? But at least if you're tracking it every month, you have more of the reminder to make manual deposits. Because if you're not looking at it, you're not tracking it, you're not going to know how much you have left over. You're probably not thinking about going and pressing transfer every single month. So yeah, I would say budgeting, keep on it, set up automations if you can, and if not, make sure you're reminding yourself to set that money aside.
Cool.
Sarah, can you talk a bit about actually acquiring debt, maybe buying a vehicle or anything, how that can affect your ability to get approved if you do that right before you get a mortgage?
Yeah, so I would say get the house first, because once you have the house, they're going to offer you the world when it comes to vehicles. When you go the opposite way, you secure the vehicle. And I mean, generally, it's pretty easy to get approved for a loan for a vehicle, but now that liability eats up your purchasing power. So the ratios will go down substantially. I definitely should have the numbers on this, but it is huge. And so if you can, I would wait until you have a house to finance a vehicle, right?
Especially now with like vehicle loans in general, if somebody already has one. I'm seeing like just the clients that are coming to me, people who have acquired a vehicle loan in the last few years, vehicle loans that you get at like 4, 5, 6%, they're now paying like 10 to 12%. In your experience, or maybe from what you've looked at, does in that sense, even though you'd be dragging out the loan, in that case, would you recommend rolling that vehicle loan into the mortgage if it's at a lower interest rate?
So you could do that if you're doing a refinance, but on the purchasing side, you can't include anything outside of the home. I have a partner that I work with, and he does some pretty cool things with financing vehicles. And so let's say you own a company and you have a vehicle personally. You can actually sell it to the company, and now it's in the corp, so it doesn't report on your personal profile. There's also ways to stretch out your amortization. So if you bought the vehicle and it's a newer vehicle, but you shortened it so your payments are higher, they're able to stretch that out, lower the monthly payment, and then give you access to more purchasing power. So they can do that with boats. They can do that with trailers. So there's a lot of options. And I think some people don't know that. Like, you wouldn't really think about that, but it is something that can help, because if you are stuck with this vehicle payment, I mean, you can't really get rid of it. You just have to work with it and try to fit the numbers in that way.
So I guess does that guy in a sense, he's kind of like a vehicle or asset financing broker in the sense where, like, let's say if you went to just like a car dealership, they're just going to give you whatever the lending options that they get, like with the institutions, whereas this guy maybe has more flexibility for that loan for you.
Yeah, he's definitely a finance guy. I don't know how he does his magic, but he does it, and he's a great asset to my business, so I love working with him. The other thing he can do is he can pull equity out of those vehicles, and I don't know, they kind of crack down on it a little bit now, but you were able to pull equity out of those assets and use it for a down payment.
That's crazy.
I
I've never
know.
heard of that.
I've heard of stuff like that before, but I wasn't sure on the rules because, well, let's say, there was a point, maybe you can still do it now, but you could get like a brand new vehicle at 0% interest, right? And so if you could leverage what you've paid off there and use that debt, I don't know if you'd be able to keep the 0% interest or if you'd have to increase it. But yeah, like kind of refinancing your vehicle or pulling that equity out to then put it somewhere else.
It would be similar to like a refinance in a car where they would pull the equity and then your interest rate would go up for sure.
But maybe it would be lower than just like a standard loan or line of credit or credit card because there's an actual aspect to it, potentially.
I have a really random question about condo fees. Going back to say somebody is a first-time home buyer, we were talking about like what the process is, like what the pre-approval looks like. If somebody was purchasing a condo, how do the condo fees impact what they can qualify for?
Well, they go directly against the ratio. So if let's say it's 350, then that takes away from their monthly amount that they're able to qualify for. So there is a huge fluctuation when it comes to condo fees because it's not just condo fees, it's property taxes. So both of those have to work together. Well, they have to fit within the ratios, right? And that sometimes is tricky because condo fees have gone up a lot. Like I say 350, but that's really light these days.
That's really light. Yeah.
Well, and the other thing is if condo fees are including heat, right? Because people don't know that we also have to debt service heat, which is actually a huge expense, which we don't debt service properly. I think in general, we do about $100 a month, but like I know that my heat bill is a lot more than that, especially in the winter.
Yeah. Oh my gosh.
Yeah.
Sarah, with credit, do you have any suggestions? Like I know some banks offer it, like just when you log into your banking portal, they might say like what your approximate credit is. But are you familiar with any platforms or online websites or anything where people can check their credit for free?
Yes. So I do suggest that clients download Borrowell, which reports Equifax, and then Credit Karma reports TransUnion. And usually between the two of those, you can get a pretty good idea of where you're sitting. Now, I want to preface that with they are a marketing company. Both of them are. So you're going to go on and they're going to offer you the world. And I don't suggest that you take it. Because they'll be, you're pre-approved, right? And sometimes that can just lead you down the wrong path. What I do suggest is there is a rule of thumb we use, it's 222. So lenders want 2 years of history on 2 trade lines for $2,000 or more. And that's going to give you the backing in order to get a mortgage. So if you have clean repayment history, 2 years minimum. Yeah, and 2 trade lines can be a credit card. It can be a line of credit. We do use cell phones. They're not generally used, but Borrowell does have a program right now where you can record your rents, I believe, which can act towards your credit score. Because there's a lot of people out there that are renting and they've been renting for years, but they're not getting the benefit of seeing that on-time payment each month just because it's not recorded. So that's another way to help build credit in the background.
I've seen different programs where you maybe pay a subscription or they pay your rent for you in that sense. So you pay them, they report that payment, and then they pay the mortgage. But Jenna, like obviously with Sarah, okay, as soon as possible, we should get that pre-approval to figure out how much we can afford. But Jenna, how soon do you recommend actually starting the house hunting process? Because I know some people are looking and they're kind of keeping their eye out and they're like, okay, yeah, if something comes up, I'll get it, but I might not buy for 5 years. So I've heard of some realtors who will maybe put you on an email list where you can like send them deals and stuff. But yeah, like, so how soon in the process do you recommend somebody actually reaching out to you to start that process?
Well, it depends. Sometimes they'll go to the mortgage broker first, like somebody like Sarah, obviously, to start that pre-approval conversation, which that is the first step. Then you should come to me. But often they might come to me and then I recommend somebody like Sarah. And then we kind of figure out, okay, great. What's the timeline from there? It's so hard. I work with some clients where I show them one house and that's, they found the perfect one. Often it takes more time than that. So I have a lot of clients who are sort of, I don't know, like sometimes 6 to 12 months out. They just want to start receiving listings. They want to know an idea of, if their budget is 500,000, what does that look like? What are their options? What areas can they purchase in? So just to start receiving some listings and kind of dip their toes into it a little bit. I have a lot of clients who do that, but I have other clients where we don't really start the process until they're like, yep, say like their rental is coming up and their lease is ending in 3 months. We start looking right away and we know that we have a little bit of a time crunch. So it just depends on everybody's situation. But typically, you don't really start doing showings of properties until you're probably a little bit more serious and ready to make that next step. But there's open houses, show homes. There's lots of things that you could do when you're sort of in the starting phase to figure out what you want and where you want to be. So yeah, I think everybody's just a little bit different. But if you are interested in receiving those listing notifications, most of the time it is a set it and forget it type of email notification. So it's not like it's extra work for your realtor. It's really easy to set up and change the parameters if something changes down the road. So that certainly can't hurt just to see what's out there.
That's super interesting because I do have clients who, they want to buy a house at some point, but they have no idea what the mortgage amount would be, right? Whether it's based off of what they get approved for or based off of what they're looking for, right? So, And then I'm like, well, I don't know how much we should start saving because, I don't know what your goal is. And so we just start saving to save. But it's interesting, to know that, these people, even if they're not ready to buy right away, they could still start the process. So we can at least get an idea of how much we should be setting aside because, maybe we could save a little bit less based off the time frame, then maybe you have a bit more money to enjoy or go on that trip while saving for a house. So yeah, it's nice to know that people can kind of get started.
And what type of offerings do you have? When somebody wants to work with you, what does that look like? What are their options?
Right. So I like to look at the full picture. I always like to even just use a house as a reference, right? You need to make sure your foundation is solid and secure. That way, everything you're working towards doesn't just come crumbling down, right? So we usually start with the budget, right? We break it down. We see, okay, how much money do you have coming in? How much money do you have left over? And then we can make a plan for that money. But before we can make a plan for that money, we need to make sure that your income's secure, right? Because, if you can't work or you're in the hospital or whatever it is, and you don't have any income protection, you can't really keep saving and investing in that time frame to hit your goals is just going to be extended. So we need to make sure your income's protected. That way, if anything happens to you, you can keep saving. And then from there, right, then we can also look at if you do have any debts, we can put together a strategy to figure out when that debt can be paid off, right? We can look to see if there's any ways to minimize your interest, pay it off sooner. But basically, right, you really want to tackle that debt maybe before you start saving and investing, really depending on what that interest rate is, because there's no point in necessarily saving and getting maybe a 2% high interest when you're paying 10 to 20% in interest in debt. Right. So debt really needs to come first. And then once we have a handle on that, then we can look at your savings. So that could be building an emergency fund, income buffer, saving for fun things like travel, right? Making sure those are set up to hit those goals. And then from there comes your investing, right? Because if you just jump to investing without doing any of these things first, if you lose your income, right, you drain those investments. If an emergency comes up and you have no money set aside in your savings, and the market's down, well, you don't want to pull that money out when it's down, right? We see the market goes up and down all the time. And so before you even start investing, it is really important to have that nest egg so that, if something happens, you have the money set aside and then you can wait for your investments to recover if you did want to take it out. But yeah, basically that kind of sums it up, right? Starting from the ground, working our way up to make sure that, if anything happens, there's a 99% chance you will still be able to hit your goals.
I wanted to talk a little bit on the budgeting side that I do in my process. So when you're saying we don't know what they can actually afford monthly, that is something that we go into when we're doing the pre-approval. So I don't ever want a client to be house poor. I know that that happens so often. And so we do look at, hey, are you renting right now? How much is your rent? Are you comfortable in that area, or is there some room? And so that's something that we look at seriously. When I bought, or me and my husband bought our first home, we didn't take into account the property taxes, which, if you know anything about Alberta, like, they're pretty big here. And so that was an expense that we didn't account for. And it did leave us a little bit light at the end of the month, you could say, especially year over year with that increase. So definitely knowing what you're comfortable spending each month on your property taxes and your mortgage is a big part of the process.
Oh, I totally agree. And I really appreciate, Sarah, when you work with my clients, that like you're not stretching their budget to the very end, just being very realistic with trying to stay with what they're comfortable with. Because I think there's a lot of brokers who just say, oh yeah, like this is your max, like, go for it. You can afford 700, and they don't really break down what that actually means in terms of the monthly payments and everything outside of the mortgage. So I really appreciate that. I just wanted to let you know.
Oh, good. Yeah, no. And that's the thing, is I learned from my own experience that was important, because we told our broker at the time, banker, we said, hey, we're comfortable at $2,500 a month. And that was our cap. We didn't think about anything on top of that. And so then when our bills are coming in and we're like closer to $4,000 a month, it was tight. I never want that to happen to anybody else.
Mm-hmm. Do you have a purchase calculator? Like, purchase price is this, so your monthly payments are this, but then your condo fees and your property taxes and all of those things are kind of in one spot.
Yeah. So when I do my pre-approval, I actually go through that in a really detailed spreadsheet for clients, and we break it down so that they can see what their maximum is. And then we can also run numbers on potential properties. So if they're interested and they're saying, hey, this looks a little bit out of reach for us, can you just run the numbers and see what that looks like monthly? And then sometimes, that can be the deciding factor for a client saying, hey, we're willing to pay the extra however much a month, or they're like, no, you know what, that's out of our budget. We can't make that work. And so I think it's really important to be detailed in that part of the transaction. So
I totally agree.
Like, there's so many different dynamics too, especially with my clients, and I'm looking at the budgets. It's like, okay, well, if you have kids, you're probably spending a lot more money, right? And so that's going to eat up a lot of that affordability. This isn't house related, but I had a client once, and she's like, I want to buy a, Toyota 4Runner. I really want to buy this vehicle. And I said, okay, well, let's take a step back and put that into your budget and see what that actually looks like. And for her, it was like, okay, do I care enough about this vehicle to lose my purchasing power on a monthly basis? Or am I okay, maybe not downgrading, but going for something a bit more expensive that still makes you happy, just so that you can enjoy your day-to-day a bit more? And so I feel like that's really important with a mortgage, because, okay, maybe you can get approved for X amount of a mortgage, but do you really want that bill? Right? And so, it's all about, the person, what their actual expenses are and how it fits.
Yeah. Well, and I think it's hard because we don't want to do that stuff. We don't want to get into the how much am I spending each month on eating out, right? But I think the first step is being aware of what your expenses are, and then you can work your life around that. So
Exactly. Yeah, you don't always have to sacrifice the fun things. You can just maybe not get the most expensive thing over here, right? So you're the best of both worlds. It's all about balance. So
okay, so let's talk a little bit about our webinar. So we're hosting a webinar on Wednesday, July 30th, where we're going to dive into first-time home buyers and the whole process.
So as a financial advisor, right, I help a lot with the budgeting, saving, investing, saving the money for the actual down payment. So I'm going to be talking a lot about, setting yourself up for success in that area, making sure you're using the right accounts to your advantage. There's also going to be some hot little tips and tricks that a lot of people don't know that can help benefit you when it comes to saving in an FHSA or an RSP, where, there could be a situation where you think it's too late, but there's little tips and tricks. If you're working with the right person, they can get you the right strategy.
And on the real estate side of things, we're just going to do a whole overview of what every step looks like. Because just like investing or mortgages, nobody teaches you this stuff. You don't learn these things in school. And I just think it's really important to have at least a basic overview of what does an offer actually look like? What do showings look like? Like how does it work when the realtor just like books a showing? What does that even mean? And then the entire offer process. Like I'm sure if you're thinking about buying a home, you've probably heard at some point the term condition, like a condition on an offer. What does that look like? So we'll just take everything step by step and just chat a little bit about what the home buying process as a whole looks like.
Yeah, and then on the mortgage side of things, I'm going to talk about government programs that are accessible to first-time home buyers. What does it look like to get a pre-approval? And then a lot of what I want to talk about is having the right team behind you to support you through the journey, because being a first-time home buyer, it can be scary, it can be nerve-wracking, and you want to make sure that you are surrounded with support and people that can help you reach your goal. Jenna, if clients are looking to reach out to you, how can they find you?
Yes. Okay. So my website is www.jennadrummond.com. A little caveat, I am getting married in September, so my last name is changing. So if you're listening to this podcast after September, my new website is going to be www.jennabole.com. And my Instagram is Jenna Lee Drummond, and my YouTube, I also have a YouTube account. It's also just Jenna Drummond. That will change. Stay tuned. But yeah, those are primarily the ways that you can get a hold of me.
Cool. And what about you, Tegan? If somebody's looking to get started in the budgeting process or just even talk to a financial advisor, how can they find you?
Yeah, so I do a lot of my marketing through Instagram. So my handle is @financewithteague. I kind of did that on purpose because also my last name will be changing at some point. So this way it'll stay the same. But yeah, @financewithteague, that's where you can contact me through Instagram. You can also email me. It's just my first name, Tegan, @financewithteague.com. So super easy. And then, yeah, you can set up a meeting. I do also have a link in my bio on Instagram. So if you just want to go in there and book a free initial consultation, just to kind of get an idea of like how my services work, how they would apply to you, and maybe get some questions answered, you can always use the link on there. It's super easy.
Okay, perfect. So I am looking forward to seeing you guys at our first time homebuyer webinar, and we will include some details for that if anybody wants to attend.